Hello, I'm Jack of all trades, and today we will be looking at how to pick a stock. I am planning on making a longer series with different topics that will help you pick a stock. This video is part 1 and will focus on the question if you should buy stocks, or that it might be better to just stick to ETFs. Enjoy the video. What is a stock? I made a video about investing for beginners. In that video I explained the following about what a stock is. Owning a stock means that you own a part of a company. Other words used for a stock are shares or equity. When you buy a stock, you become a shareholder in that company and have a claim on a portion of its assets and earnings. If you want to buy or sell a stock, you can do that on a stock exchange. Famous examples of stock exchanges are the New York Stock Exchange or the Nasdaq. You can access a stock exchange through your broker. A brokerage account lets you buy and sell your stocks on different exchanges. Stocks are usually referred to by a ticker. A ticker is a unique series of letters representing the company. Examples are AAPL, which is Apple, and MSFT, which is Microsoft. Stocks versus ETFs. ETF is short for Exchange Traded Fund. An ETF is a bundle of stocks that are combined into one product. So instead of buying one stock, you buy the whole bundle at once. Examples of ETFs are the S&P 500 and the MSCI World. In another video, I went over everything you need to know about ETFs. The advantages of stocks over ETFs are customization. Investing in individual stocks allows you to handpick the companies you want to invest in. The level of customization can align your portfolio with your personal beliefs, values, and investment goals. Chance of higher return. You can concentrate your investments in companies you believe have strong growth potential, which can potentially lead to higher returns if your stock picks perform well. Direct ownership. When you own individual stocks, you become a direct shareholder in the company, entitling you to certain ownership rights, including voting at shareholder meetings and potentially influencing company decisions. Learning opportunities. Investing in individual stocks encourages in-depth research and analysis, which can be an educational experience for investors looking to enhance their financial literacy and understanding of the markets. There are also disadvantages for stocks, which are higher risk and volatility. Investing in individual stocks may result in a lack of diversification, which can leave you more exposed to industry-specific or company-specific risks. Owning individual stocks can be riskier than holding a diversified portfolio, as the fortunes of a single company can significantly impact your investment. Requires time and expertise. Successfully managing a portfolio of individual stocks requires time and expertise. It involves researching companies, staying updated on news and financial reports, and making informed decisions. Trading costs. Frequent trading of individual stocks can lead to higher transaction costs, such as commissions and fees, compared to investing in ETFs, which are generally more cost-effective. Emotional investing. Owning individual stocks can lead to emotional decision-making, such as panic selling during market downturns or becoming overly attached to certain investments. You don't necessarily have to choose between ETFs or stocks. A combination of the two might actually be good for you, especially when you're currently playing it safe with ETFs, but you also want to dip your toes into the stock water. Core Satellite Strategy. I'm personally following the Core Satellite Strategy. The Core Satellite investing strategy is a popular way to build a diversified and balanced investment portfolio. It involves dividing your portfolio into two main parts, a core and a satellite. The core is made up of low-cost, passively managed investments that track major market indices, such as the S&P 500 or MSCI World. The satellite is made up of higher-cost, actively managed investments that aim to outperform the market. The core provides stability and long-term growth, while the satellite seeks to generate higher returns and enhance overall portfolio performance. The goal of the core satellite strategy is to achieve a balance between risk and return that is appropriate for your individual needs and goals. My core is a mix of ETFs, with the MSCI World as my biggest ETF. The core is about 50% of my portfolio, which gives me some stability in my performance. My satellite is currently a combination of 13 different stocks. The satellite is the other 50% of my portfolio and gives me the opportunity to personalize my portfolio and improve on my stock picking. So, should you buy stocks? Well, if you want to spend more time researching and staying up to date, and you're willing to take a little bit more risk and are willing to accept a worse outcome than just plain ETF investing, then buying stocks could be something for you. But if you don't want to do all that, then please stick to ETF investing and slowly follow the market on its ride up in the long run. I hope you got some value out of this video. This is the first video of a longer series about stock picking. In the following weeks I will be sharing more videos about this topic, so make sure to subscribe so you will not miss them. If you have any questions, feel free to reach out or leave a comment. Thank you and see you next time.